Hello, good morning. My name is Ronald Kashweka. Maybe you've been visiting my channel for a while. Let me just explain a few things about myself. So, I'm an accounting tutor. I do online accounting for taxation, management accounting, financial reporting, financial accounting. I also do Excel and Pastel as well. I do QuickBooks and I teach accountants how to prepare management accounts and basically how to practice accounting. Okay, so today I want us to talk about something special. You can probably see it on my screen already, but I want to talk about something special. So imagine this: you walk into a shop, pick up a product, and before you even check the price tag, you ask yourself, "Can I afford this?" That's exactly what businesses ask themselves. That's the question that many businesses actually ask themselves every single day. And the answer lies in one powerful financial statement, which is the balance sheet. Today I'm going to show you how the balance sheet is not just a boring statement filled with numbers, but actually a mirror that reflects the true financial health of a particular business. So please do me a favor, sit tight, because by the end of this session, you'll never look at a balance sheet the same way again. Okay, let's get to understand what a balance sheet is. So a balance sheet is like a snapshot. It captures the financial position of a business at a specific point in time. It tells us three particular things. Okay, it tells us three simple things, but very powerful things. The first thing is what the business owns. That's the assets. So the assets represent what the business owns, and they're in two types. That's the current assets the business will utilize for over a year. For just a year, and then the non-current assets for over a year. And then it also tells us what the business owes. That's the liabilities. So the liabilities are also in two types. That's current liabilities and non-current liabilities. The non-current liabilities are the liabilities that will pay for over a year, like over a year. And then the current liabilities are the owings that will pay within the year. And then what remains is the owner's equity. So the owner's equity represents what the owners actually put in the business. It's what the owners own in the business. It's their share, their capital, the amount of money they invested in the business, and a little bit of their return, the retained earnings that they didn't remove from the business. And if we have any revaluations, we also put them into considerations. So in short, a balance sheet uses what we call the accounting equation, which is assets is equals to liabilities plus equity. That's the golden equation. Very simple, very powerful, and trust me, unshakable. Okay, so let's break it down. Okay, assets. Think of these as the toys of the business: cash, the buildings, the cars, the laptops, stock. These are resources that help the business run. Liabilities. These are the debts and promises. The money business must pay back, the loans to the suppliers, wages owing. The equity. This is the owner's claim on what's left over after paying all the debts. It's the true wealth of the owners. So when you look at a balance sheet, don't just see numbers, see the story of survival, the risk, and the growth. Okay, but you might ask yourself a question: why does this matter? So, why is the balance sheet so special? Why is it so powerful? Let me tell you why it's powerful. To investors, it whispers: is this company worth my money? To creditors, it shouts: can this company pay back? Can this company pay me back? To managers, it guides: are we safe or are we in trouble? In other words, the balance sheet is the ultimate reality check. Okay, so in our simple example, we have assets of about 20,000 kwacha, and we have liabilities of 8,000 kwacha and equity of 12,000. So the balance sheet will look like this: the total assets will be 20,000 kwacha, and the total liabilities plus equity will be the 20,000 kwacha when we add the equity and the liabilities. It practically balances. That's the reason why it's called the balance sheet. So next time you hear balance sheet, don't think of it as just another accounting topic. Think of it as the financial selfie of a business, a picture that tells you instantly whether a company is rich, broke, or thriving. And here's the best part: Once you master how to read it, you will be among the few who can truly understand the language of business. Remember, accounting is not about crunching numbers, it's about telling the story of money, and the balance sheet is one of the most powerful stories ever written. Beneath in the description of this video, you'll find my mobile number. You can contact me either to join my classes if you have a query, or basically just anything. Okay, and if you have a question or any comment, drop the comment, like, subscribe to the channel. Thank you very much. My name is Ronald Kashweka. Thank you. Goodbye.